Hi, everyone. I'm Laura Adams, and you're listening to the Money Girl Podcast. I want to thank you for downloading this week's show and spending some time with me. My mission is to help you live a richer life and love the journey. I'm always interested in what topics interest you, so feel free to email your money questions or comments to me at money@quickanddirtytips.com or post them on the Money Girl Facebook page. You'll find a transcript of this show on the Money Girl section at quickanddirtytips.com. It includes all the resources that I mention, so you can follow up on anything I talk about in the show. This is episode number 377, called What is the Obamacare Health Insurance Penalty? And if you've been enjoying the show, I'd love for you to do me a quick favor. Post a short review on iTunes. That helps new listeners find the show and become subscribers. When I talk to friends or the media about the Affordable Care Act, which is known as Obamacare, one of the most misunderstood parts of the law is the penalty for not having insurance. The penalty applies across the board to just about every American. In this episode, I'll cover what you should know about the tax penalty for being uninsured. You'll learn how to calculate the penalty, what the increases will be in future years, and who gets a break from having to pay it. If you're not familiar with the Affordable Care Act, it was signed into law in 2010, and it requires every American to have health insurance with minimum essential coverage starting in 2014. It doesn't matter if you're employed, self-employed, unemployed, a child, an adult, or where you live, the law applies to you. And if you have dependents, you're responsible for getting them coverage as well as covering yourself. There are some penalty exceptions, which I'll cover in a moment. Many low and middle income Americans will qualify for a health subsidy. That cuts the cost of your premium, depending on your income and family size. The government pays a health subsidy directly to your insurance company, so you just get billed for the reduced monthly amount. The Obamacare penalty is actually a tax that will be collected by the IRS. And just like most taxes, it's a little complicated. The fee for not having health insurance is calculated in two ways, a percentage of income and a flat fee. You have to pay whichever amount is higher. So let's start with the penalty for 2014. I'm going to give you a lot of numbers here, so stick with me. And you can always go back to the transcript for this show if you want to look at it again to refresh your memory. If you don't have coverage, you'll pay one of these amounts when you file your federal tax return. It's either a percent calculation, which is 1% of annual household income, above the threshold for your tax filing status. The threshold part means that you don't get penalized on the first $10,150 of income if you're single, or twice that amount, or $20,300 if you're married filing taxes jointly. You just get taxed on the amount of your income above that amount. This percentage calculation method has a maximum cap, which is set at $2,448 per person and $12,240 for a family with 5 or more members. So what that means is that even if you have a really big family, the cap is $12,240. You could never pay more than that amount for 2014. Now, the second calculation is called a flat rate, and it's $95 per adult or $47.50 per child under the age of 18, up to a maximum amount of $285 for a family. So I know this is a little complicated. What happens is you've got to calculate it both ways, and then whichever amount is higher is what you have to pay. So I'm going to give you a couple of examples to help you understand what you might owe for going without health insurance in 2014. Penalty example number 1 is a single person with no dependents making $45,000 per year. So let's say Sarah is unmarried, she has no dependents, and makes $45,000 a year but doesn't have health insurance. For the percentage calculation, you subtract her filing threshold from her gross income. So that's $45,000 minus $10,150. The remaining amount of $34,850 is multiplied by 1%, which equals $348.50. Then you compare that amount to Sarah's flat rate penalty, which is $95. Since the percentage calculation of $348.50 is higher, that's what she'll have to pay when she files her 2014 tax return in April 2015. Penalty example number 2 is for a family with 2 children making $100,000 per year. John and Pat file taxes as a joint married couple. They've got 2 children under the age of 18, and they earn $100,000 in household income, but don't have health insurance for anyone in their family. Their percentage calculation is $100,000 minus the filing threshold of $20,300 multiplied by 1%, which equals $797. The family's flat rate penalty is $95 per adult plus $47.50 per child, which equals $285. Since the percentage calculation is higher, they must pay a penalty of $797 at tax time. Now, a lot of people say, well, the penalty is so much cheaper than getting health insurance. While it may seem low compared to the annual cost of purchasing health insurance, the Obamacare penalty is going up significantly in future years. Now that we've covered the Obamacare health insurance penalty for 2014, let's talk about what's going to happen in future years. If you don't have health insurance in 2015, you'll pay the higher of the following 2 calculations. It will either be 2% of annual household income above the threshold for your tax filing status, or $325 per adult, or half that amount per child. So the percentage penalty rate doubles, and the flat rate more than triples for 2015. In 2016, the penalty rate goes up even further to 2.5% of income, and the flat rate will be $695 per person. After that, the rate will be adjusted for inflation. I mentioned that the penalty for not having health insurance doesn't apply to some Americans. Here are some exemptions and hardships that allow you to legally avoid the penalty. Let's say you had a short lapse of coverage, which was less than 3 consecutive months during the year. In that case, you don't have to pay the penalty. Also, if your income is less than the tax filing threshold. Another situation is if the least expensive plan available to you costs more than 8% of your annual household income. In that situation, it's considered unaffordable for you. Or maybe you have low income, but you're not eligible for Medicaid in the state where you live. The penalty does not apply unless you're a legal U.S. resident. It doesn't apply if you're incarcerated. It doesn't apply if you're a member of a federally recognized Indian tribe. And also if you had trouble signing up. Let's say you couldn't get health insurance due to a hardship, including homelessness, eviction, foreclosure, domestic violence, the death of a close family member, and unpaid medical bills. All those are situations where you could legally avoid the Obamacare penalty. Now, even if the penalty is more affordable than actually buying health insurance, skipping the coverage is a huge mistake. Paying the penalty is money that you'll never see again. It's just gone. And if you get sick or injured and you don't have insurance, you risk getting a huge medical bill that could devastate your finances. You can buy health insurance in a variety of places, such as from a local insurance agent, an online service like insurancequotes.com, or through a state or federal health marketplace like healthcare.gov. And one final quick and dirty tip. Before you buy health insurance, make sure that it qualifies as minimum essential coverage under Obamacare. Otherwise, you can have subpar coverage and still be subject to the healthcare penalty. For more money tips and advice, be sure to connect with me on social media. You'll find Money Girl on Facebook, Twitter, and Google+. And I'd also love for you to subscribe to the free Money Girl newsletter. The sign up is at quickanddirtytips.com. I'm glad you're listening. Cha-ching! That's all for now. Courtesy of Money Girl, your guide to a richer life.